Hey everybody, this is Greg Ryder, CEO and founder of Angel Investors Network, and I want to say thank you for joining us today. I'm pretty excited to share this information with you guys, and we're going to get started right on time as we always do. Because why? Because we are time fanatics. I am a time freak, and I believe your time is the most valuable thing you own and possess. And I want to say thank you for sharing it with us, and I want to make sure you get value out of it, and I want to make sure we respect your time. So as we get going with this, there is a chat box on the left-hand side, or maybe it's your right-hand side. I'm not sure. Anyway, go ahead and type in there your name and what city you're in from, and we will just make sure that the sound check is going okay and everything's going fantastic. And while I'm waiting for people to do that, they're jumping on the line. Everyone's always coming on in a few minutes here. I want to introduce my guest today, and he's actually going to be interviewing and asking me questions and grilling me. I said, look, you just grill me on this. So this is Delray Wanamaker, and him and I have been friends for a while, but he's been around this industry of helping entrepreneurs get funding, raise capital for decades. And he's been involved with tens of thousands of broker dealers, investment bankers, registered investment advisors, and accredited investors. And he's got one of the biggest databases of anybody I know in the industry to help support what we're doing. So I started telling him about our 5 steps to raising millions of dollars. He's like, dude, I've never heard that before. That's interesting. I got a bunch of questions. I said, why don't we do a live Google Hangout and you can ask me the questions live. So Delray, thanks for joining me today.
Oh, thank you, Greg. I appreciate you having me on. I look forward to digging into this. I've told a few people in our membership base, and we want to learn more about it. I mean, I can't wait to hear you say you cracked the code. So we're going to dig into that and see what that looks like.
Yeah, so I appreciate that. So we got Billy coming in from San Diego, and Kathy from Seattle, and Daniel from Biz Synth, I'm not sure what city he's from, and Bob in Campbell, and Mary in Colorado, and Randy in Georgia. So they're coming on, you're popping on, everyone can hear me okay, or they wouldn't be doing that. So with that being said, let me just kind of dive into the philosophy and some concept here real quick. First of all, you guys made a good choice by coming here, and I'm assuming that you're listening to this because you need to raise investment capital, or you're an investment banker or an angel investor and you want to learn additional strategies that you can leverage to raise capital for companies that you're working with as either an investment banker, or maybe you're an angel investor and you guys need to bring in more money than your angel group can put in. We deal with a lot of angel investors who love this strategy. So I want to say you're at the right place, you're at the right time. And when I say I wrote some copy about this, and I really believe this is the holy grail. This is just short of a miracle, and the reason I say that is because, and Delray, you can comment on this too if you have some personal stories, but I personally have been involved in raising capital since I was 19, 20 years old, and as I tallied it up over the years, it was well over $103 million that we've raised for early stage startup companies. And most recently, in the last 10 to 15 years, we would go to events like Delray has great events. We'd go to events like Delray's and we'd raise money, and we'd go do pitches, and we'd go to angel groups, and we'd get on planes and in and out of hotel rooms. And that's how we raised money, and it worked. But sometimes it doesn't work, especially in 2009, 2010, 2011. The model was completely broken. It's coming back strong now. But now with the new laws, things have changed. And Delray, you've had a lot of experience with what you've been doing with holding events and companies coming to raise capital. And give a little insight as to how you've done that and what you've experienced with that, because we're going to share with you a different model. And it's not that it replaces going to events. It's something that you got to consider if you're raising capital.
Absolutely. Yeah, no, I'll tell you just a little bit about my background. I've been, an entrepreneur at heart, from when as far as I've worked with quite a few startup companies. I've built companies of my own and sold them. So I really uniquely started on the side of an entrepreneur, just building my business, looking for capital, and I understand how hard that is. In 2008, I sold my last business and jumped into really on the finance side. And so since then, I've helped build 3 different portals, which is obviously part of the Jobs Act. It was before the Jobs Act in 2009, way ahead of its time. And I've had and been part of building several different groups. Accredited Members, one of those, where we hold conferences throughout the country and do face-to-face, raising capital, in rooms, meeting each other. So I've got a unique, background in the sense that, one, I've been an entrepreneur first. I've always been business development. But then when I moved over, I was always looking for those ways to streamline the process of raising capital, leveraging technology, which is obviously all part of the Jobs Act and what people are going, towards. And they're bridging that gap and what people are used to, which is just the face-to-face, meeting and raising capital. And there is a balance between the two. And I think that's really where the magic happens. And that's really what we've developed with First Look Equities. And so when I heard about what you were doing, it's just, again, it's another add-on. It's a natural progression. What I'm hearing is it's another way of reaching out, and it's creating an efficiency in helping these companies and, quite frankly, investment bankers or the investor get access to good quality investment opportunities to save them what you mentioned at the beginning, time. Because as you believe, I believe that time is the most precious resource we've got, more than money, by far. And so anything we can do to save on that and help people raise the capital, we're really into. So that's really why I'm interested in hearing more about what you're doing. Because if it can help our membership, whether it's the companies or the investment bankers or the individual investor, which is really what we consist of, I want to bring those tools to our folks.
No, that's fantastic. And I think what's really cool, and we've talked about this, and this is what's going to happen with Delray and Angel Investors Network in 2016, is the combination of our marketing expertise, our direct mail marketing expertise, combining with the live events and joint venturing on that really is a great model, because there is nothing like getting belly to belly. But I'm going to show you a different way, and I'm going to show you an easier way today on how to do this. And it all starts with the new laws. And so I'm going to make a big assumption here because I don't want to get into a big lengthy description of the new laws. But the synopsis is, in 2012, Obama signed a law into act called the Jobs Act in August of 2012. And it's been taking years and years and years for these laws to be enacted. Well, there's some certain laws that have been enacted that are game-changing laws that really have changed the landscape, changed how we can do things and how efficient we can do things. And that's what we're going to talk about today. So what I'm going to do is I'm going to go ahead and dive right into a PowerPoint. And I got maybe 15, 20 slides here. We're going to go through this, and then we'll open up for your questions. So if you have questions, go ahead. Keep in mind, just write them down. You'll be able to type those questions in. We'll answer those questions, and we'll make sure you get all your information done. But we're going to show you exactly how you can raise between 2 to 50 million, virtually guaranteed, like literally no risk. And I had a guy tell me yesterday, go, Greg, come on, that's over the top. And I said, okay, it's over the top if you're not worthy of investors' money, if you're not worthy of investment dollars. So the prerequisite is if you have a good deal and you are worthy of investment capital, this literally will work for anybody. And the risk is very, very, if none, minimal. And I hope to persuade you by the end of this that you see that. And again, I got a live participant because this is Delray's first time seeing this. He's a pro. He's been around. And I got to get him convinced live. So, and I've asked him, don't hold back. Tell me what you really think. Hit me with the hardest questions. Grill me everywhere you can. Shoot holes in this every way you can. And let me see if I can defend my position that this is the new holy grail for raising capital. So let me go ahead and share my screen here. Share screen, and I think I'm going to go to this one. Boom. Did I lose you guys there for a second?
You did.
That was weird. Okay.
Okay. Well, Greg, I think you hit on one big point, which is, and maybe you worded it this way, but I mean, yeah, part of what we do too is we look at investable deals, right? Looking at deals that have been vetted. There's due diligence that's been done. These are investable products. I think that really is key to investment. So I don't think that's unique necessarily to your program, but I think it's key to its success for sure. Anything we do.
Yeah. So here's what happens. So hold on a sec. I've got two screens going on here, and I have this the slide showing up on the wrong screen. Okay, this is going to be different. I don't know how to do this, but I guess I'm just going to do it. So let me share screen again. I got to share the screen, and then I got to go over here. So tell me you see the PowerPoint there on my screen.
Yep.
Okay, cool. So this is what we call the 5-point plan for generating millions. And unlike a lot of webinars and stuff, I'm not going to keep you guys in suspense to the end on what these 5 steps are. What we're going to do is I'm going to go through the 5 steps right away. Again, and if you look at these 5 steps, you go, it's not for me, I'm out of here, you can bail, right? If you go, wow, I like this, this is intriguing, you can stay, and then I'll break down each 5 steps and we'll go into detail. Again, respecting your time. So the first slide, we're talking about part of the law was it now allows us to advertise to accredited investors our private placement, our private offering for the first time since the Securities Act was created in 1933/34. And I found a stat that in 2014, that the Securities and Exchange Commission reported that more than $14 billion has already been raised by early adopters who have taken advantage of this new law. Now, these are mostly hedge funds and big private equity funds that are already using this to advertise to accredited investors. And all we're doing is applying this to the early stage startup growth small business, but the big guys are doing it and already been doing it to the tune of $14 billion, okay? So here's our 5-step plan. It's simple, it's scalable, it'll work for any entrepreneur trying to raise capital, again, with the caveat that you're worthy of investment capital, right? And that's a big thing, right? You have to be worthy of investment capital. So the first thing we're going to do is we're going to purchase a highly qualified list of 100,000 accredited investors. Now, I'm going to break all these down in detail. So this is the high level stuff, right? Then we're going to mail a direct response, and that's a very, very key word, a direct response, 12-page, and in some cases even a 16-page advertorial marketing piece to those 100,000 investors. Now, as a side note, when I had my brokerage firm in the 80s, and you might remember this, Del Rey, we did a lot of direct mail. I was doing about 500,000 pieces a month because that's what I used to get leads for all the brokers that worked for me in my brokerage firm. So we're going to put together a direct response, professionally written advertorial, and we're going to mail it to these 100,000 people. We're then going to integrate an email and social media marketing to increase response rates. So we'll also email, and we'll also do Facebook, Google, retargeting, and we're going to have a fully integrated marketing campaign to these same 100,000 investors. So we have multiple touch points, multiple viewpoints. So as they travel around the internet, they're seeing us everywhere they go. In the case studies that we have, and this has been done already, and we're seeing about a 1% response rate. Now, we believe that over time, we can increase this as we continue to test and optimize and continue to test new things and optimize these things. But even a 1% response, that's a 1% response. That's 1,000 people that we know are accredited investors. We've sent them a 12-page marketing piece on your company that you're raising capital for, and now they've raised their hand and said, hey, I want to talk to you guys. I'm interested in investing, okay? Now, in the case studies I'm going to lay out for you, a measly 5% of that 1% was closed. And this is our goal. This is our minimum goal. So you're going to get 1,000 people raising their hand saying, I'm interested. And now those 1,000, we're only going to get 5% of the 1,000 to make an average investment of $50,000 to raise $2.5 million for your business. Now I got to ask you, would that be good for you, right? So instead of in and out of hotel rooms, traveling, fees, pitching, you're just mailing 100,000 target investors. You're sending a mail piece to them. You're following them around on the internet. You're emailing them, your social media, and you get 5 of them or 50 of them to put 50 grand in for $2.5 million. So that's the 5 steps. So now, if you're at the point where you're going, can't do it, don't want to do it, doesn't make any sense to me, you can bail, because the whole rest of the presentation, I'm going to break each one of these steps down. So the first one is, let's just talk about direct mail and the keys to success, because direct mail, you can do it and lose your shirt, right? And you can do it and make millions, tens of millions, and even billions. I'm going to show you one case study, or talked about one case study where one firm has generated over $1 billion in money management through direct mail. But there's 7 critical keys to success of direct mail. One is the right list. We have to buy the right list. And anymore, everybody knows it's a given to say that everything we do is tracked everything we buy is tracked. Everywhere we go, everything we do is tracked, and then that information is sold. So like Facebook buys information from other people, and other people buy information from Facebook, and they combine it, and they profile us. So we profile investors with the right, we want investors with a $3 million of net worth. We want them to have responded to direct mail in the past. We want them to have done a trade at E-Trade or a brokerage account in the last 3 months, so we know they're directing their own investment. We want them to have a golden retriever. We want them to own an American Express Black Card, right? We can identify the ideal investor. And in certain situations, you might want a female investor, you might want a male investor, you might want investors from this age to that age, you might want them geographically located. So the first thing is getting the right list. Now, the firm that we work with, which I'll be talking about a little bit, they're the best at this. They've been doing it for decades, and they have about a dozen different list providers that they buy lists from, and they can constantly test and make sure the lists are pulling. Next is you have to have the right direct response copy. You just don't send them a magazine. You just don't send them a letter. You just don't send them a postcard. You send them a 12-page advertorial that's professionally written, that's written in a way to get a response. And I'm going to go into that in more detail too. Next is the right direct mail format. With all these different choices, do we send a letter? Do we send a magazine? Do we send a newsalog? And I'm going to show you some examples. But you got to choose the right format for the right company and the right marketplace, right? So for instance, with an offering targeted at women, we might do something that's more magazine oriented, looking like a Vogue or something. But for men, maybe it looks like a Wall Street Journal. And then what we do is we create a landing page. We create a direct response internet page where when they reading this thing, and they don't necessarily want to call, because we will give them the opportunity to call, but they want to go on the internet and put their information in. We create a landing page where we can capture those leads, and that's all they can do. There's no distractions. We reinforce what they read. We reinforce what's going on. We put some technology in there to track that they came there, and we capture that lead properly. And then we got the follow-up to the leads. This is amazing, and I'm going to give you a big problem with this down the road that we have solved. And then we go back to analysis. So as we do this, we're tracking every mail piece, we're tracking every list, we're tracking everything, and we're sending out multiple variations so we can done this. So again, when you do this direct mail right, it will generate the lowest cost per lead, lowest cost per sale than any other medium, period, bar none. And the thing that's good for us, and the thing that's great about this, is because of the internet and so much money is being shifted from offline to online, it's our mailboxes are not as filled up with direct mail as they used to be. But direct mail works, and it has for centuries. So let's talk about the list. And I already kind of mentioned this. We're going to buy 100,000 credit investors. We're going to track, and we're going to get exactly what we want with the right net worth, the right income, and other metadata. And again, depending on if you're a high-tech company, an engineering company, a B2C company, a B2B company, all these will go into us profiling the perfect investor that we want to target for you. So we want to be efficient with this, and we want to do this, and we want to profile the right investor. So this is no different than in any marketing situation. When we're marketing a product or service, we profile our ideal customer. So as we spend our marketing dollars and we market to that end customer, we're spending our money with people that could be customers. No different with this. And by the way, as a side note, one of the things that we do is we teach that raising money for your company is a marketing function. It's just like marketing. You're marketing your investment opportunity with the right words, the right picture, the right structure, the right language, talking to the right people. And I constantly see people spending way too much time on the wrong people. They're not targeting the right investor. So that's very important that we do that. Now, to give you an idea, and I had another slide I forgot to put in here, but to give you an idea, the accredited investor list, they're well defined, and you can get them based on income, age, and here's some ideas of how old they are, what their incomes are, and how many there are. And then here's one for just the net worth, because with these new laws, we can only sell to people that are accredited investors, which means they have a net worth of 1 million or more. So you can see here on this list, with people over $1 million net worth, there's 8,237,954 accredited investors in the United States alone that we can buy these lists and market to. Now, again, we're not going to do it to that many people. Obviously, we're going to do it to 100,000, and we're going to target the right ones. So there's plenty of people out here, and this is why it's scalable, because you can do a 100,000 piece mailer, do another 100,000 piece mailer, do another 1,000 piece mailer, and you could just raise $50 million. We have one of our clients getting ready to raise $28 million with this strategy. And again, going back to this list segmentation, I can't tell you how part of geographically, likely to respond, having a brokerage account, they've done a trade. This is the kind of stuff we're going to add. And this is the expertise that you're investing in when you work with us and our partner in this, because our partner in this is one of the top direct mail firms in the country for 30 years to the financial community. Okay, step 2. In order to get that highly qualified investor lead, we want them to respond to a 12-page advertorial that we call, it's a direct response, a newsalog or a magalog, and have it professionally written by a professionally written copywriter that, one, knows how to write copy that evokes emotion and evoke a response, but most importantly, write copy that evokes emotion, evokes response, that communicates to the investor and the investment community, which again, this is very, very a niche copywriting type of guy. And great copy can sell just about anything, and it can help you sell stuff on your terms. So then let's talk about our direct mail choices. You could do an envelope. You've maybe seen them. If you're an investor, you've seen them. You've seen the envelopes from Fisher Investments and things like that. It could be what we call lumpy mail, where you're sending something and you're putting something lumpy in that to get it open. There's all kinds of strategies to get the mail opened, handwritten address and things that look like handwritten address. But we focus in this particular on the magalog and the newsalog, and we rotate headlines to make sure we get the best response and see what's going on. And we make sure we zip code sort things, do that kind of stuff to get the best price that we can. And newsalogs are kind of like a newspaper look, a newspaper feel. And actually, I'm going to show you guys some. When I get done with the PowerPoint, I have them. I'm going to hold them up in front of the camera. And here's a screenshot of one. So now this one was done for a health-related investment opportunity or health-related direct mail campaign. And you can see it was laid out to look like USA Today. So the subconscious mind is, look, there's already a level of credibility because of the way it looks. And you can see we have powerful headlines, health through breakthroughs, lower your blood sugar, or even end your diabetes with this 3-part breakthrough. So what we do is we surround the copy pitching your deal with other, what I call money magnets around your copy, with other industry news or other industry facts to support a case that you guys have a great deal, a great offering. And you have obviously eye-catching graphics and copy that gives the prospect information that they're going to need to make a great decision to reach out to you. So, and again, now here's a couple other ones. So we have the newsalog on the left. That's Investors Journal. So again, it's more designed to look like Investors Business Daily. And then we got a magalog on the right, where it looks like a magazine, and it's kind of more of a magazine format. But again, think about a piece like this, and the whole 12 pages is telling these stories in an article form, written by professional copywriters, and everything is substantiating a case that you have a great investment opportunity and asking them to contact you. And this is key. This is why we win, and this is why this works. So now let's talk about step 3. In order to optimize our responses, it's not just enough to do the direct mail. What we do is we take technology that we have available to us, and I remember sharing you with you months ago, Delray. We take that 100,000 piece list and we upload it into various technology like Facebook and AdRoll, various remarketing platforms, and they'll find that person on the internet through that email address and allow us to put banner ads and other things branded, no matter what website you go to. You're on Google, you're on Facebook, you're on Wall Street Journal, you're on Forbes.com. Doesn't matter where you go, we can put advertisements in front of you to reinforce that touch point. So now you got it in the mail. Now you're seeing it when you're surfing the internet. You're seeing it when you're on your phone, checking your Facebook. And in addition, we get about 25% of these have valid email addresses. We also will do an email and introduce what's going on through email. So we're combining a fully integrated email marketing campaign. And in addition to the ones that call, we obviously have phone guys that will take the phone calls and talk about that too. So one of the side notes here is our landing page. So as we do our remarketing campaigns on the internet with technology, we want to make sure we drive traffic to a landing page, and we want to make sure that this landing page is legally compliant, because again, we're dealing with securities laws and state laws and that kind of stuff. So we have all the the expertise to make sure it's legally compliant, but we also have a thing to make sure that this landing page does what it's supposed to, and that's generate a qualified lead, right? So and again, I got an extra slide here. I'm saying the same thing. So we're going to remarket through our direct response banner ads to the landing page to increase the ROI and decrease those touch points. And we're going to do a Facebook custom audience. And again, that's the same thing. We upload the list into Facebook. Facebook creates a custom audience for us and we can advertise. So no matter when you log on to Facebook, no matter what time of day it is, no matter where you are in the world, we're going to put an ad in front of you on Facebook, basically saying the same headlines, the same copy, the same branding that we sent you in the direct mail piece to bring out that familiarity and give you another touch point in an effort to get in touch with us and to raise your hand and say, I'm interested in this investment opportunity. So it's a fully integrated marketing strategy, mailbox, Facebook, around the internet, banner ads, and it just helps sell them on your opportunity. Now, step 4, this is where Angel Investors Network comes in and our team. So we have a marketing division called Angel Marketing, and this is what we do. So in the case study that we had, 1,000 leads, we haven't met too many issuers that are anxious to get 1,000 leads and try to follow up on 1,000 leads. So what we do as part of our service is Angel Investors Network. We will take in those 1,000 leads. We will talk to them on the phone with professional investment closers, former investment bankers, former stockbrokers. We'll take those calls, handle it professionally, answer any questions they have, get rid of any tire kickers, find out, make sure they're qualified, and then we hand over the highly qualified, ready to invest leads to the issuer, to you who are raising money. And so now you only have to deal with maybe 100, 150, 200 people to get that investment in the door. Now, this is a fantastic situation because we know how to talk the language of capital. We know how to answer those questions, and it's easier for us to sell you than it is for you to sell you, and most entrepreneurs just aren't good at it. So this is great for us. And again, let's say you're an investment banking firm and you don't need us to do it. You can have the leads come into your firm, and you guys take the phone calls. That's fine too. So it's open to that. But I'm just saying, as a solution, we want to make sure to increase your response, you have professional people taking and taking those phone calls. And step 5 is just sending out the prospectus and the investment documents and the subscription agreements. Now, again, Delray knows about this. We have technology. We have a crowdfunding platform called Bankroll Ventures. And if you work with Bankroll or a technology platform, and Delray's got one as well, that the documents can be delivered electronically, tracked, numbered, everything done legally compliant, and really systemize and automate the efficiency of this whole process. And that's why this is such a game changer for what's going on out there, because it just takes all of the onus and all the hard work and puts it into technology and to marketing, and let marketing do its job, let technology do its job, and help make it a much more efficient process for raising capital. So now here's a slide kind of talking about the cost per lead, right? So the cost per lead. So if you go to the middle here, if we get a 1% response rate, that's 1,000 leads. That means we paid $100 per qualified lead, right? So if you think about that, so, we want to break this stuff down and kind of look at our costs there. And then let's go to the page that really matters. Now let's get the conversion rate. If we get a 1% response and we convert 20 investors, we raise $1 million. If we convert 50 investors, we $2.5 million. If we convert 70 investors, that's $3.5 million. And that's only 7%. I believe with professional money investment bankers taking these leads, you should be closing closer to 15 to 20%. You remember, these are people that are qualified financially. They've already raised their hand after reading a 12 to 16 page marketing piece. You should be able to close 15 to 20%, but even 10% is even reasonable. So you could literally have the upside to raise, $3.5 to $6 million off one of these direct mail campaigns. So that's the end of the presentation. I'm going to go ahead. You guys get your questions ready. And now, Delray, this is your chance to hit me over the head and talk about, what questions you have and where you can shoot holes in this. And
sure. Well, you've answered quite a few of the questions I actually wrote down as you were going. You were answering on the slides, some of them. Length of campaigns. What is the typical length of a campaign?
Well, you started breaking up real bad there for some reason. I'm not sure, your microphone was real sketchy. So Delray asked me, what's the length of a campaign and the timeline?
Yes.
So the timeline is that it's about a 90-day window to get. So you write your first check, and we get the copy going. And then about 3 weeks later, you have to write a second check, and then about another 4 or 5 weeks later, another third check, and then we're out the door. So we divide it up into 3 payments, and it's 90 days. We do the copy first and get the copy going back. That's about a 30-day process to create the copy. And by the way, I'll give you an example. So here's the one I was kind of showing, right? So again, when you're looking at this, everything is supporting Cardiologists Come Clean. Everything is supporting, the whole marketing piece. So this takes 30 days to do that. Then after you do the 30 days, we start, and during that, we're building on the landing pages and the copy and all that kind of stuff. Then we start looking at the lists, and then we start getting the list going and getting the thing printed. And then you got to get the whole piece printed. And then once you get all printed, you're ready to go in the mail. Then you buy the actual list that you've been studying and looking for and profiling, and boom, you get that thing in the mail and you get it out the door. So it's about 90 days from the time that you start the process till your mail gets in the door. And then after that, the leads are coming in within 7 days to 21 days, and then the profit faucet and the money cash flow just starts flowing.
Sure. Now I know the laws are all pretty new. In fact, the Jobs Act, I mean, they just finally passed the last Title III portion of that Jobs Act that you mentioned, several years ago was signed. And in fact, we're going to be covering all that obviously at our next event, the whole entire. But because it's so new, you mentioned case studies. You have this out. You have tested. I know we've done it with digital stuff at our group. You've obviously added some other component thought through, the follow-ups and all that, which we found to be extremely important. But the couple case studies that you have done have both been successful, you mentioned, and you're basing these statistics off of that. Is that correct?
Yeah, so the 2 case studies that were done, and by the way, I'm going to put in the chat room here. You guys can check it out after we're done. The firm that we use is called Creative Direct Marketing Group. Do the direct mail pieces, and they have been doing this for 30 years. I'll give you an example. So they've been working with Zacks. Everyone's in the financial world's heard of Zacks research, and Zacks started doing money management, and they've helped Zacks raise over just right around $1 billion under management by doing direct mail pieces. They've helped companies generate, like they got one health company that's doing $50 million in revenue that they started from zero, doing nothing but direct mail. And they on and on and on. They've worked with the Motley Fool and Forbes and Peter Schiff and all the newsletter writers. So I just going to send everybody this. Let's see.
Okay.
There we go. There's the link to that website. That's supposed to be ink.
What here is really what's interesting about this is we all are familiar with direct mail, right? And then we went into this digital age. It's almost like the pendulum is swinging back the other direction, because I get 200 emails a day. All of us are getting a lot of emails. Texting is actually more effective now than emailing, they say, pretty consistently. I think the people that are adopting it. But it seems to me that the direct mail, and from a marketing perspective, from what I'm seeing as well for conferences and things, is coming back to being more effective again. So what I'm hearing you say is that really is the flagship of this, and you're using all the other technologies really to be a support mechanism to the direct mail.
Right.
Yep.
Okay. Now, and again, think about this from a direct mail standpoint. So depending on what kind of company you are, you might get a triple hit. So let's say you're a B2C business. With a B2C business, you're getting the brand recognition, which is always good in building up that intrinsic value and getting your brand to be worth more money. 100,000 people is a lot of people. And then 2, inevitably, people are going to be reading, one of these pieces, and they're going to be going off to your website and downloading your software, checking you out. So you're getting traffic to your website, and maybe you have an app, like we're looking at doing it for one of our clients that has an app for their phone. They're going to get downloads for their phone. So then you get the leads. So it's like a triple hit that you can do the whole direct mail.
Sounds like you can tap into multiple budgets potentially. Like if you've got a certain capital, but you have another one for marketing, there could be a way a company could use some of their marketing budget to help execute on something like this. That's what it sounds like.
Yeah. And let me give you an example. When I say virtually guaranteed no risk, So let me ask. Go ahead and you guys start thinking your questions and start typing them in the chat room if you ask. Because somebody just said, "How much does it cost?" Because that's the and thank you for that, Greg. That's the $1 million question. So the fee to do this is $200,000, and for $200,000, you get our services, you get the 100,000 list, you get the direct mail made, you get the copy made, you get the Facebook, you get the landing page, you get everything to do this. So that's $2 a person. You and I, Delray, we could never go write a piece like this, go get it printed, put a stamp on it, put it in the mail, and get it out the door for $2. It's impossible. But because the company does tens of million direct mail pieces a month, they have all this stuff wired. So now here's where I say it's virtually risk-free. And let me give you a real world example. So one of the clients that we love and that we've invested in and our network is invested in is called StarShop. And StarShop has an app for your phone where you can shop. It's like a home shopping network for your phone, but it's all celebrity driven. Now they have a deal with Sprint. Sprint actually owns 25% of StarShop, and Sprint is preloading this app on millions of phones. And in the next 3 to 5 years, they're going to probably preload it on 30, 40, 50 million phones. So they got guaranteed distribution there. Plus Sprint has a marketing division called Pinsight, and Pinsight's tasked with marketing online and generating tens of millions of impressions online, as well as they are going to input stuff in the bills, and they do push notifications to the Sprint customers. So they got this guaranteed distribution. Then you got the founder of it, it's Kevin Harrington, who's one of the sharks from Shark Tank. Then you got the CEO of the company, who was the former president of L'Oreal when they were a multi-billion-dollar company and had 5,000 employees. Plus, they have every celebrity you can think of, from Beyonce to Justin Bieber to Katy Perry, and they market their stuff on this app. So it's a great story, sexy story. Plus, they're in that app world where you have these unicorns that turn into billion-dollar deals. So everyone feels that this is a potential billion-dollar deal. So here's the way I would say that. Now, when you know that that story is worthy of money, and I mail that to 100,000 people, and I get 100,000 people to read this thing about Sprint's involved and how there's 153 unicorn apps and Kevin Harrington from Shark Tank and all these celebrities, hey, this is a good deal. You get 1,000 people, which I think with StarShop, we'd probably get a 3% response, would be 3,000 people. But let's just say it's 1,000 people. What's the chances out of those 1,000 people, we don't close 4 of them for $50,000 investments and get the 200 grand back? It's virtually impossible. I don't see how you can mail 100,000 people of a deal that's worthy of money, that has a good story, that's done right, properly targeted with the right list, the right copy, and not get 4 investors to get your money back. So you have the risk of very little, because you're going to get your money back if you have a good deal, but the upside to raise 3, 5, 6, $2.5 to maybe $6 million off a $200,000 investment. And it just makes everybody feel more comfortable that's already written a check or that's going to write a check. Because you know this, Delray, and I know this, the biggest problem we have with investing in early stage startup companies is, are they going to get enough money? My dad always taught me, Greg, write the last $100,000 check. If they're raising $2 million, tell them to call you when there's $1.9 million in the bank, and you'll write the last $100,000. So we kind of do this kind of stuff and put that into place. So now shoot some holes in that, Delray. What do you think about that whole risk thing? Can you buy into that?
Well, yeah. What I'd say is that you've got a 200,000. I'm not sure. I guess that's the first time I've heard that number too. I'm just hearing about this the first time. Is that your entry level number of all? Because I think to me that tells me that no company that's not, I mean, 2 million and above is what you need to be raising to qualify. Which was, what are the qualifications? What is the perfect company for this program? What do they need to be raising and that sort of thing? And I think you just answered one of those. I guess is my point, is that I think you got to raise 2 million to be able to really look at this program, and anything above that, it probably makes sense, right? I mean, you're going to spend that kind of money anyway, or you probably already budgeted that.
Yeah. So let me address that, because that's a great question. Actually, yeah. Melissa's asking a question about that, and Paul brought it up as well. So here's the thing you guys got to understand, Melissa and Paul and everybody else that's addressing this. If you need to raise less than $2 million, this particular strategy isn't going to work for you. But that doesn't mean you couldn't do a 1,000-piece direct mail campaign or 5,000-piece direct mail campaign. But it's really hard to get statistically reliable results. But you still can leverage this strategy to raise money. You got to be really strategic about it. We can do that. But here's the other thing that I've told a lot of people. A lot of people are like, Greg, I do need $2 million, but I don't have 200 grand. I'm trying to raise 2 million. Where am I going to get 200 grand?
Right.
Here's the pitch. You're much more likely to get the funding you need to go try to pitch people to give you 200 grand to implement this strategy to get the 2 to 3 million than you are to go raise 2 to 3 million on your own. So I want you to change your mindset and change your thought process. And now you're pitching investors, hey, Mr. Investor, I need 200 grand. Here's what I'm going to do with the 200 grand. We're going to do this, this, and this. We're going to mail these 100,000 people. Through that's going to generate $3 million. So now they feel comfortable of putting up that money and getting that done. And we have investors on this call today, and we're going to invite more investors to this call that are interested in doing bridge loans. Well, they'll put up the money and they want 250 grand back to put the money up and some warrants to do that for you. So if you're one of the investors listening to us and you like this strategy, you go, hey, I'll loan the money to the right company. I want the first 250 off the table and a few warrants for putting the money up. So we're putting together a bullpen of investors that see this as a great strategy. Now I'll give you another scenario with that. So I had an angel investor come in our office and he said he invested $150,000 in one of his deals. The company's doing great, but now they need another 2 million. So what are their choices? Their choices are they got to go from event to event to event to event to event to event and pitch that deal. And maybe you're worthy of VC money and you can go negotiate the right terms, the right valuation with VC money. That's a different story. But with this, we're going to high net worth investors that you're getting $50,000 to $100,000 out of, and you don't have to really worry about arguing over valuation. And you can get those same investors that already put in the first round to pony up the dough to go for that second round because they see this as a viable method to get the funds in the door that really is scalable.
Okay, so your question is, so the answer is that you can do some smaller campaigns. You just statistically they're not as scale. So you have a scalable price on this. I mean, somebody could do a $100,000 campaign, but the other option is there are some potential funding sources to help raise the capital to actually roll out one of these campaigns. Which
if you're worthy of the investment and worthy of doing it, we're putting investors together to do that, to put up those bridge loans.
So you're going to vet that, obviously you're going to vet that. And the thing is, nobody's going to invest in that if they don't think the company's fun. So I think that helps kind of pre-vet some of these things. Now this is a dumb question, but I've got to ask, not a dumb question. I'm going to assume I know the answer, but I need to ask it because I'm sure you get asked all the time. So is there a guarantee? Use the word virtually guaranteed. Is there a guarantee of raising the money? Is there not a guarantee into that? Or how does,
there's no guarantees of raising the money. I just think that with the right company, the risks of not getting your investment back is minimal. And I'm going to answer Robert's asking about the case studies that were done. And he said, obviously with Kevin Harrington and famous celebrities, that makes it easier. And that's not typical of a typical startup. Well, see, Robert, that goes back to the exact issue of being worthy of money and having a great deal. You don't have to have celebrities, but you have to have a great management team. You have to have great upside. You have to have massive upside. You have to have an industry and things that you can point to that are going to show people that you do have a great example. Matter of fact, if there's a guy that came in our office the other day, he's got an LED light that you install in places, and he wants to raise a couple $1 million. And it's like, this is a no-brainer. Like everything is going to LED lights. You save 60% on your light bills. You're putting it in warehouses. But again, there's a lot of competition. So you have to put your stuff and you have to package that investment opportunity in something that's attractive. What do investors want? They want to make money and they want minimized risk, right? So when you can paint a picture that you have a great deal, you have a great strategy, you have a great product or service, and you have a great management team, and you got a great opportunity for them to make a great return on their money, you can do this. This works for real estate deals. This works for all kinds of stuff, bonds. It can work for anything. You just got to be able to tell the right story and target the right investor. So Robert, I hope that answers your question and kind of does that. And
yeah, and Greg, correct me if I'm wrong. Correct me, but I don't think StarShop isn't one of those case studies, is it? The case studies.
No. We're looking at doing that for StarShop the first quarter of next year, and then we're looking at doing a $30 to $50 million Reg A plus. Now a Reg A plus is a different law. It's like a mini IPO. It allows us to advertise to anybody, not just accredited investors. So now we can do direct mail, lower the standards of the net worth, still profile the right investors, and drive the money in to raise 30 to 50 million. So again, the whole point is if you're trying to raise capital, how do you get your deal in front of investors? Well, it's kind of hard on the internet. You can go to various funding portals and you can get in front of investors on various funding portals and crowdfunding platforms, but it's hit and miss, and there's a lot of competition. There is no competition in that mailbox. No one else is doing this. You're not going to, like, an investor's not going to come home and find 5 deals in his mailbox pitching them on a deal. Now, maybe 2 years from now, that'll be the case, right? Because this is a game changer. This is so different. And like you said, Delray, we're going back to the blast of the past, because in the 80s, all the investment community did direct mail.
Yeah, no, you have to be active. I mean, there's no question with the new regulations and the new laws and mineral solicitation, but it's going to get extremely noisy out there. And I do see that as a big a competitive advantage of going back to something that not everybody's doing, because it's going to get so. All these platforms, there's crowdfunding platforms all over out there. The reality is, I just had several conversations today from the experts in this area, and the SEC is going to be cracking down because there's all these false, like you go out there and they say they've raised all this money. It isn't accurate, and there's several ways they can the public in that area. They're saying, yeah, we raised this many million on the platform, and the reality is they didn't. And so you have to be careful. And so I think there's just going to be a lot of noise out there. And so breaking through that and finding a different medium to get back to these leads, effective. So the case studies, back to the case studies.
Well, hold on a second. Let me make a comment on. So the thought process there is, this is a strategy, right? It's a strategy that you can walk through from A to Z. And you talk to any other investment banking firm or anybody else in the investment community to say, what's the strategy to get me funded? What is that strategy? And it's hard to nail one down as clear and precise and succinct as this. So go ahead and ask I'm going to answer one quick question. So Patrick asked a really good question about who owns the 100,000 person. So if they buy a list of investors, who owns that list? In the list business, you're just renting the right to use that list. So no one owns that list. We're renting the right to mail it one time. You have to pay each time you do it. But the people that respond, you would own the 1,000, 2,000, 3,000. You would own those, would be part of your asset.
Yep.
Okay. So, and then Melissa's asking, so is the 200,000 due after all 5 steps? No, there's the first check is it's like 50,000 up, and that gets the copywriting going. And then once the copywriting's going, as we move into getting the printing going, we'll do another 100,000, and then when we're ready to do the mailing, it's another 50,000. So that's kind of how it is. It's 50,000, 100,000, 50,000, and that's kind of the sequence. And we have a little Excel spreadsheet calculator that shows all the dates and all that kind of stuff and when it's all done. But that's kind of like the timeline from it. Okay, cool. I'm reading some of these other questions. If you got anything else, go ahead, Delray.
Yeah, how can we get a hold of the case studies, or how can people get a hold of that? Do you have a place where they can download that, get that, request it?
Well, so we're working on putting some of that stuff together. The problem is that most people, they don't want to share, all their results. It's like, I did this deal, but I don't want people calling me, and I don't want to do this kind of stuff. So it's just one of those things that you really got to feel comfortable about what's going on. And we do have some references we can do. And when you guys go check out the website of Creative Direct Marketing Group and you look at their client list, again, it's very extensive, who they've worked with, what they've done. You got to obviously do your due diligence. You got to make your steps, but we're going to make anybody feel happy about that prior to, pulling the trigger. This is not a get rich quick scheme. It's just a solid, duplicatable, replicatable strategy. And we are trying to get permission to maybe get a video recording of the 2 previous case studies. And right now there's 3 or 4 more in the hopper. I'm actually doing one for one of the companies that I own. So probably by first quarter, second quarter, by the end of the second quarter next year, we'll have a number of case studies because we're doing this. I can't think of a less risky situation to raise millions and millions of dollars. And to me, I just like it so much better than what we've been doing and how the system does work. And we'll be building up our own, database of investors as well. Okay, so Daniel says, BizSynth.com is interested in raising the 200 grand to run this kind of campaign. Cool, Daniel, we can help you do that. You just got to give our office a call, 760-233-2860. I'm going to put that in here too, 760-233-2860. Let's see here. Looking for 5 million, ready to share 50-50 on net profits. And Kenan saying, email me here. Okay. But can you see this as like, you deal with a lot more professionals and investment bankers than I deal with. I deal with like the angel investors. But can you see how this is a great adjunct to the investment banking side of the world? They put up $1 million, they allocate $200,000 to get this thing going, and they got the phone ringing off the hook. They're building up their book again, and they're raising the capital. And again, now they're taking their fees and commissions for raising the capital. So it just makes so much sense for them as well.
Yeah, no, yeah, absolutely. I'd like to explain. I mean, a lot of people probably don't know the real process here. I mean, when you get into the areas that we're talking about, where you're raising the 5 million, 10 million, 15, 20 million, 25, you have a budget typically of several $100,000 to go raise that money. You always do. And what you do is you pay a lot of different people. You pay your investment banker some fees. You pay IR folks. Their fees tend to introduce you typically to individual investors. And what you're talking about doing is really leveraging the new regulations in a new way of doing essentially that, introducing these companies to a much broader range of investors. And so I can see how different way to generate those leads. It really comes down to, in my experience, being able to close those leads at that point. So those lists are what you're providing is, there's no question, the lists are available. They are looking for good investments. The key will be finding quality companies, like you said, that meet the criteria, which I don't think anybody's clear on yet. I think that's something we're going to have to talk about, maybe at a different session or something you could send out to folks. But to get the right company, right, to the right investors, which is what you guys focus on, is filtering out, I guess, and making sure it's going to be. I can see it.
And let me address this for everyone who goes, okay, it doesn't work for me, right? Because it's like, I don't need that much money, or I can't get that done. I only need 50 grand. I only need a couple $100,000. We have a lot of people on our database, and probably some on this call, that's all they need. So again, we're doing an event, and I'm going to put it in the thing. It's called Angel Money Marketing Live. And I want you to check out the link and go to check out Angel Money Marketing Live. This is where you want to come, and you want to learn how to raise capital, the language of money, how to market your investment opportunity, how to market your business, how to do joint ventures, how to find the right investor, how to profile your investor. Because we do stuff like we're doing today for 3 full days. And you'll leave that it'll be the best investment you've ever made, because you're going to leave those 3 full days, how to market your product or service better, how to generate the cash flow you need so you never lack money, how to raise the capital, how to find the investors, how to structure your deal, because there's lots of money out there, but it's really hard to get if you don't have your act together. You really got to put this marketing hat on, and you got to work on your messaging, you got to work on the name, you have to have all of the answers ready to give an investor, because there's investors in your neighborhood. It's your dentist, it's your doctor, it's your chiropractor, it's the guy down the street. There's tons of people that would love to invest in an early stage startup. And again, Shark Tank TV shows really helped us. People watch Shark Tank and they're thinking to themselves, oh, I'd invest in that deal. Oh, I'd invest in that deal. Well, that's your neighbor. That's your friend. But you got to know how to talk to them. You got to know how to structure your deal. You got to know what to say to them. So we're not saying that there's no way out for the smaller guy. We're just saying for the ones that are worthy of 2 million and up, this is a great strategy for you to seriously consider, sink your teeth into, contact us, do your due diligence. And if not, get to our Angel Money Marketing Live. I put the link in there. It's angelnetwork.com, and you can even get there from angelnetwork.com. You can get to the thing, but /AMM Live. And the other thing is, Del Rey, you're doing an event where you bring people belly to belly to belly, and people present their deals to investors who are writing checks and wanting to get involved in funding. So tell everyone a little bit about that option.
Yeah, what we've got this time, we have Yellow America is going to be obviously hosting that. We're going to be in Atlanta, Georgia. But we're going to Jobs Act and really dig into it from a regulatory standpoint. So we're talking bankers, individual investors, families, and we're going to unpack each area of these the regulations, what you can and can't do, how this changes the landscape, how it's going to benefit the investor and the individual. And then you're right, who are presenting, who are looking for that 5 to 25. Well, we'll go from really $2 to $25 million range, depending on the opportunity, both public and private opportunities. So you got to be putting that all together, and bringing the investors, bringing the resource partners, the education, and the investment opportunities together in one room in Atlanta, Georgia. So, and then go to firstlookequities.com to find out more about that, and just kind of see who's participating in that. And so this is a good fit. This is why it's interesting, and I wanted to have this call with you today, is because obviously everything to do with the Jobs Act you need regulations, you need to understand how they work, which one's right for you. But once you pick it, the majority of the changes across the board is about general solicitation. This is a reason, this is something that you're addressing. I hope everybody here on the call understands that prior to this law change, no, you could not talk to somebody about your investment unless you had an opportunity, unless you knew them, I mean, a relationship. So this is a complete shift in how to raise capital. And so you're providing a service, I can see, to be able to reach those folks. The professionals, investment bankers, folks you talked about earlier, Greg, they've lost their book of business in a lot of cases because they haven't figured out to go back out and reach and generate new leads. And they are going to be needing these tools. And so I'm grateful that you're going to join us at the end, and probably I think you're going to plan on doing a special session just to educate people on some of these tools that are available for them. Because I think investment bankers may be interested in this for their clients.
Well, I'm going to be there, and we're going to do a 2-hour a bonus marketing strategy. Because again, I want everyone to understand marketing. This webinar, we are marketing, right? We are marketing. And now with these general solicitation rules, these new laws, you can now do webinars from your office and invite investors to watch you. Now you got to make sure you comply with the laws and do stuff right, and not make all these forward-looking, be careful on your forward-looking statements. But this is marketing, and it's a game changer. It's different, and it's much easier to get people to do this. So I want to share with everybody around, and you know why? It's because I wrote a book. Do I have one sitting around here? Saving America One Crowd at a Time. And I'm a huge proponent of free enterprise and capitalism. And I want to help people leverage strategies, tactics, relationships to get funded. Because I read somewhere, and my wife questioned me on this, but I read somewhere, and it seems like it's true to me, but I read that for every dollar we invest as an investor, it creates $3 worth of jobs. Because I give it to somebody, they spend it to somebody, they spend it to somebody, and somehow they've calculated that it generates three different dollars in jobs or touches jobs. But anyway, it's just, we need to help entrepreneurs get this done. It innovates, make things happen. So I'm excited about that. So I'll be at the event. We'll be talking about marketing. And I want you guys to check out the firstlookequities.com. Go to angelnetwork.com/AMM Live. And I got one last question I'm going to answer. So Charles is saying, another great concept, Greg. In addition to owning the contact information for those who respond to the 100,000-piece mailer, what access would we have to the information on the follow-ups with the investors who communicate with your team? We would work with you, Charles, and however you want to do that, we'll make that accessible. We could even figure out a way to have you involved in that, but we will make sure that you have access, and we're going to be getting that information from you. You got to train our guys on what to say, how to say it, what to send, how to follow up, how to qualify. And we put together a little sales process in there so it's all systemized and automized. And then, of course, we'll optimize that as we go to make sure we get the best stuff. So I got a guy, Sam, and Sam says he's willing to finance this. He likes it. He's like, hey, I'd be willing to maybe loan the money for somebody to do this and get those kind of returns. So this is hot. This is so cool. This is so hot. And I'm telling you, you're taking your time. I want to say thank you again in between Christmas and New Year's. But by the second quarter next year, you won't be able to book us. We will be booked up because how many calls can we take? How many 12-page things can we do? I literally have 30 to 40 companies circling, talking to us, doing their due diligence. And the ones that pull the trigger, I figure we're going to have 7 to 8 or 9 of these pull the trigger to do this in the first 60 days. And then we're going to be booked up, and then you're going to be on your own, right? So there's only so much time a day. So if you have an interest, get in the loop, call our office, 760-233-2860, email us, whatever you have to do, and we will reach out to you and get this stuff going. So with that being said, we're right at the hour, 12:57. So I'm gonna go ahead and let you give your parting words, and I'll wrap it up, Del Rey.
Yeah, Greg, no, I appreciate you taking the time to explain this to me, and I do think that there's an absolute need for this. I think this is the time. I look forward to digging into more of the details of this. I look forward to seeing you at your event and seeing you at our event and seeing what we can do together. I think there'll be multiple people investment bankers that'll be interested in deploying a strategy like this. So thank you.
Fantastic. Well, I appreciate your time, Del Rey. Happy New Year to you. Everybody, thank you so much. Do what I do. Wake up every day with an attitude of gratitude. Tell somebody you love them. Get your flag out. Be an entrepreneur, create some jobs, make things happen. And I want to see you in San Diego for Angel Money Marketing Live. Talk to you later, buddy. This is Greg Ryder signing off.
See you later. Thanks, everybody.